So, welcome everybody. Welcome to Colliers Baltics webinar about 2020 third quarter commercial real estate overview. I hope that more people will join. I see that we have quite many already online. We are expecting today around 200 participants listening us, about half in Zoom and half over our Facebook account. And let's wait a few seconds more people will join, and then we can start with the presentation. So I think that we have already most of the people online ready to follow us. So I think it's time to get started. And the first part will be about investments. As we like to say, that the investment market is a kind of health indicator of the real estate and especially commercial real estate market. So what is going on there is more or less reflecting the overall state of the market and how it functions. 2020, of course, has been significantly affected by the COVID situation, especially Q2. In Q3, as we hoped during the spring, we saw market coming back, bouncing back, and many deals that were either prolonged or put on hold in the first part of this year were finalized in Q3, and also many deals negotiations were continued, and hopefully we see more actual deals happening by the end of the year. We all hope, of course, that something significant still will happen. The total volume as of Q3 has been 664 million for the whole Baltics. This year Estonia has done pretty well compared to the last years, but we have had one very big deal and a couple of other larger deals also. And then clearly, let's say, Lithuania has been underperforming, especially compared to the previous years. If I'm not mistaken, then the third quarter total volume of first 9 months was on the same level only back in 2013. But still, I would say that investment appetite is pretty high, and the reason is that there is a high amount of free capital seeking placement, seeking opportunities. Alternatives are not that good also, so real estate is quite interesting and preferred asset for investments. Of course, because of this COVID situation, there are certain sectors that are more in focus, especially grocery-related retail, also logistics, and in logistics mainly also what is related to maybe grocery, e-commerce, distribution, stuff like that. And this is not only Baltics kind of speciality, but this is the situation also, for example, in the rest of the Europe. And also core office is something that investors see more, how to say, stable, maybe especially in the long run, so they dare to invest also in core office. So what about the pricing? Of course, pricing is an issue at the moment. Yield-wise, I would say the situation has been rather stable, And in some cases, some special cases, and maybe more related to logistics, we have even seen some additional yield compression compared to the pre-COVID era. So in that sense, it has been quite interesting to follow. The main challenge for the investors and also the owners regarding the situation, are deals happening or not, is most probably the cash flow issue, how sustainable the cash flow is, how clear the cash flow is, are there any running discounts, will there be additional discounts? So the question is, what is the actual cash flow we are talking about, and what is the kind of basis for the eventual kind of deal value then? And there are the questions that do the kind of buyers and sellers and owners, do they agree on the future view and how optimistic or pessimistic they see the situation. One very kind of hot topic has been, as always during the crises, are there any distressed opportunities available? Currently, I think we can say that we don't see any significant or at least large-scale distressed opportunities available on the market. And probably the main reasons for that is that we don't have a financial crisis at the moment. Owners are pretty well capitalized. They can manage this situation regarding, let's say, diminishing cash flow. They can still service their loans, and also banks are quite flexible. They are working together with owners to, let's say, overcome this hopefully short-term situation. And also over the past 3, 4, even 5 years, also, let's say, the financing has been pretty conservative in sense of loan-to-value ratio, for example. So many investors have financed their deals with LTVs, let's say 50-60%. So this gives also a clear additional room and the flexibility to survive, so to say, this situation. So we don't see any kind of significant problems that could result in distressed assets. Of course, there's one sector that has been hit very hard, and where such situations might emerge maybe in first hand is hospitality, mainly hotels, etc., etc. But at the moment also, maybe it's too early to see and say how much and what opportunities might arise in that sector. But we have to say that, for example, Colliers also has quite many hotels already on offer. But I would say that none of those offerings are by essence distressed at the moment. And good thing and interesting thing regarding, for example, hotels is also that there are some interested parties, mainly operator related, who are actually seeking now new opportunities and seeing opportunities to either strengthen their market position or entering the market. And they are clearly having a much longer view. They are seeing situations past, let's say, this potential crisis, and they are looking for new opportunities. So they could be a totally new player in that sense on a market that could take up some existing hotels that are in some problematic situation, or some from some owners, operators who are thinking about, for example, leaving the market. So there is always hope, and even if the situation looks very drastic at the moment in hospitality sector, maybe it's rather we must see it as a time and opportunity to take some new positions. And if to talk about something more interesting and new, then I would say that it has been very good to see that also residential as an investment in commercial real estate scene has been coming more and more to the market. We are talking about the rental, especially starting from maybe Estonia. We have had some activity already over the past couple of years. And interesting news was that now in third quarter also Eften Capital announced that they are creating new fund specifically meant for rental apartment investments. So hopefully, and their view is all over Baltic. So they are in the future looking to opportunities in Estonia, Latvia, Lithuania. And I know that also some other investors are thinking the same thing. So it's just diversifying their investment strategy, looking new opportunities, and this I would say is very welcome to the overall market. We hope that fourth quarter will give us, as mentioned in the beginning, more deals. The situation is still complicated. Most probably we will see that most deals are happening between local players, I mean also local investors, because cross-border investing in our region at the moment is very complicated. If at all, cross-border investment in Europe is very much concentrated into the core kind of markets, core areas. So it's most probably that we don't see significant foreign investment in 2020 in our countries. But as said, crisis is always a time for opportunities. So let's be rather kind of optimistic. And at the moment, I would say clearly that there is a light at the end of the tunnel, and no reason to be too pessimistic about this. So that's all from the investment side. You can always use the chat option below the screen if you have any questions, and at the end of the presentations we will try to answer as many of the questions as we can regarding the timeline. Now to go forward, I will give a word to my lovely colleague Sandra, and Sandra will then speak about office market in Baltic states. So go ahead, Sandra.
Thank you, Margus, for a nice introduction. It will be my pleasure to walk you through the office market in all three Baltic capitals. Before we do that, I just wanted to mention one more time that we reached participants limit on this Zoom webinar. So in case your colleagues are not able to join this call, we also do a live stream in Facebook in Braille page. So without further delay, let's start. Starting with the construction. So for example, in Estonia, construction remains rather active, especially activity has been raised again after the summer was finished. And so also there was many buildings commissioned at the beginning of 2020, therefore the vacancy has raised. We also expect that current projects under construction is expected to be completed more or less on time, with maybe a small delays for some projects. So as well as to be mentioned for the Thailand market, we feel that there could be another opportunity for A-class quality office development in the city CBD. However, we can see that most of the developers are targeting new development activity more in 2020 and a little bit later. However, we see that market would allow such an activity. In Riga, development activities remains active. However, actual construction numbers is smaller in comparison to other capitals. But the pipeline looks promising, and several large schemes are completing final preparation stages to start the construction. So the future in terms of supply looks rather promising. In Vilnius, the construction has been most active for Vilnius city, and I would say for any of the Baltic capitals. There's many projects under construction. Majority of this will be delivered in B class in 2021. And we do see that there might be a lack of selection in A-class segment in Vilnius. However, in 2022, the situation shall change and the activity shall return to this segment too. Also, there is several quality schemes that has been put on hold because of uncertain situation, but they're ready to kind of start whenever they need. The other trend kind of start influencing the market, and I want to make a clarification that this trend is still not of the major concern in any of the capitals. So it's basically a sublease space entering the market. So what is happening in each capital? In Estonia, we feel that there might be approximately 10% of potential sublease space that could reach the market. However, it's not how to say active yet, but we feel that the companies are discussing this topic, and this is not yet fully settled situation. In Latvia, there has been already a few sublease spaces reaching the market. However, it's definitely not becoming a trend. We can say that there is a complication of adopting offices and office suitability for the sublease, because majority of the cases would require physical separation, quite substantial investments into that. And also we can see that the companies feel that they need to retain the offices in order to preserve company culture, etc. In Lithuania, sublease market is also definitely felt under the water. There has been no drastic measures to get rid of the offices or office space reductions announced officially. But we can definitely state that realistically office occupiers can already select from ready fitted offices, in some cases offering furniture as well. So this is not the trend yet, but this space is already kind of participating in the occupiers market as potentially assessed options. So again, summarizing all situation with sublease space, we see that mostly large occupiers and small companies alike are considering this topic. However, it's definitely deciding case by case, and if this is happening, we don't see that it will definitely very much will disturb the markets. Work from home tendencies are lasting and they are valid in all three capitals. And we would say work from home is predominantly influenced not even so much by the COVID situations in the capital, but it's more global policies implemented on the companies, because we have cases where companies are not allowing to return employees to work and have very strict policies, up to 10% only working in the office. But we would state that more or less about 50% of larger occupiers has returned their staff to the offices. And the most active returning back to offices was small and medium enterprises in both of the countries. Now, work from home influence on the market. So our colleagues in the EMEA is predicting that work from home can basically influence market up to 30% in demand. So anyways, there has been a lot of questions about vacancy rates and rents. So I can mention that vacancy rents will increase in Vilnius and Tallinn, and however, we feel that it probably will remain stable in Latvia or even go downwards. And rents are experiencing downwards downwards pressure in every market. Now, to speak a little bit about the demand, we see the recovery signs in all three markets. So in Estonia, pretty much in all the markets at Q2, all the demand activity were stopped, processes were canceled, put on hold, etc. And those deals that were happening, they were mainly driven by the existing occupiers' relocations or expansions. So, and the main driver in Tallinn, at least, and in Riga was ICT sector. And now regarding the new activity, we feel recovery. So there has been much more inquiries in Tallinn about the new space. Riga is a star in recovering in office market. So it's already had completed in Q3 during this summer season and holiday season deals of 8,500 square meters. And we calculate approximately that currently companies are looking for 25,000 square meters in Riga for new office space, screening the market. So these are mostly existing occupiers. But however, Riga should see already newcomers as well, which another positive trend for that market. In Vilnius, activity was, on the contrary, I would say, quite strong in the first half of the year, but it was influenced of the previous year processes. And then we had a notable slowdown in the activities. So most of the developers were mostly busy negotiating with restaurants and medical sector. However, the market does not stand still. We also calculate that currently under assessment, there might be around 16,000 square meters of new space or new deals, potentially looking at new office locations. So that's all from me. And if you have any questions, we will be happy to answer them in the chat. Thanks. And I'm handing out word to my colleague Agia on the retail.
Hello, everyone. It's nice to see you all. In a sense, this is the only way how we can see each other. Last time when we met in quarterly this webinar, we were still just out of the lockdown. There was online shopping was part of our life, and now things are getting back to normal. In a sense that when we look at the statistics on the right side of the screen, you see that retail sales had a huge drop during April. However, now we see that the growth levels are back to normal, and online sales that all the time have been having this double-digit growth is currently slowing down. And on August, we even have negative tendency, meaning that the online sales this August in Estonia and Latvia were 12% lower than last year, indicating that we are going back to brick and mortar. We want to have these shops. However, what's the difference? The leading segments have changed. We see that there is lots of activity in do-it-yourself, home improvement, hobbies, and sports goods segments, however, less in some of the others. And this is also what we see from the objects that are currently under construction and are being continued. For example, soon in Riga, we will see opening of new shopping center that has all of these segments that are now doing good, all of these together, meaning shopping center Saga is due to open November 10th. They have 3 segments, which is convenience, meaning grocery and small other retailers, sports goods with new names such as Yahipaun and Decathlon, and do-it-yourself. With new names such as Hortus. Also, we see similar activity in all 3 Baltic markets in do-it-yourself segment. Moki Veži just opened in Vilnius. We see depot being built both in Riga and in Tallinn, and also some other new do-it-yourself developments that will soon start. And another segment that is still going strong is the grocery, especially the grocery objects that are located close to the densely populated areas. Those are the objects that currently have the best turnover and footfall figures. And recently, Capital Min started construction of new Prisma-led grocery retail object on the border of Tallinn. Also, we see Lidl continuing their expansion, and recently in Latvia, they announced more than 1,000 store job vacancies, meaning that we will see opening of the first stores soon. What is happening with the traditional shopping centers? We see that the prime shopping centers are doing quite good. They have still quite near zero vacancy. Turnover figures are close to last year's figures or even at the same level. Footfall figures are a bit lower. Here, the explanation might be that we see more of planned purchases and less of this just window shopping and going to shopping centers to spend time there. This is one of the reasons why also the average basket have increased. For secondary shopping centers, the situation is a bit more challenging as we see higher vacancy, and those brands that are currently expanding at all, those are the ones that want to be in prime shopping centers and are the ones to take those vacancies first. So for secondary, they have to come up with either some rent incentives or some other incentives to bring new tenants there. However, the vacancy, the figures are maybe not that good. For example, in Latvia, we have 6.1% shopping center vacancy, which is the highest level since 2011. Quite high figure also for Estonia, but still nothing too bad, and it will be observed at some point. What do we see? What are the tenants that are currently taking these vacancies in secondary shopping centers? We see that some brands from street retail are moving there, and also we see just some tenants that still can move into those empty places, especially had increased activity in dining segment in Estonia. What's interesting is that, maybe not interesting, a bit sad, I would say, shopping centers in central part of both Tallinn and in Riga are doing quite bad. They have increased vacancy, and their normal customers that were tourists are currently not there, as we still have quite heavy travel restrictions. And these are the shopping centers that have to adjust. And that's not only the central shopping centers, but also street retail. For example, for Riga, we managed to calculate street retail vacancy, which is currently reaching 20%, which is a really high figure. Previously, we had quite many express grocery store openings in street retail that we haven't had since the start of COVID. What are the main reasons for those brands that are currently more successful and those that are less successful is basically the quality of their online stores. We see that several large brands are still improving their online presence, are improving their services, and those are the brands that are here to stay. Those are the brands that will succeed. And what we hear also from our colleagues in EMEA region are that landlords are trying to incorporate ways how to get this online turnovers, some percentage from those online turnovers, so they are adjusting the rent agreements. We don't see much of this happening yet here in the Baltics. It's still case by case. However, this is becoming more common. I think this is, yes. And of course, where do we see this segment going? The things we predicted at the beginning of the year, which objects will be the strongest, haven't changed. As we said back in February, that omnichannel, mixed use, and service-oriented approach is here to stay. We still stand by those words, and those are the things that you need to succeed in today's retail world. And now I'll be giving floor to my colleague Regimantas, who will share more on the news in industrial segment. Thank you.
Thanks, Agia. So, hello everyone. And it's not a big secret that in industrial and logistics, we've been through some black and white situation during the second and third quarter of the year. Probably most of us started the second quarter with something like, okay, it's going to be bad. The only question is, how bad is it going to be? And yet, just a few months after, the mood in the market is basically, has it really happened? So now, if to give a short summary on the third quarter, I would describe it the following. First of all, as due to lockdown, the majority of the expansion and relocation decisions has been put on hold. And now it's almost back full speed. Not all the pre-COVID transactions continue. Some of them move still rather slowly. But on the other hand, they has been substituted by new business cases in the market. And basically that means that activity levels are at the same trend as it was in the first quarter of the year. Maybe even luckily to stabilize the market was that the delivery of completed projects was mostly driven by build-to-suit, build-to-own type of projects in the market. To name few notable, I would say in Tallinn, it was fourth stage of Smart and Logistics, in Riga, Little Logistics Center, in Vilnius, there was build-to-suit projects for Delamo, Doribalt. There was a speculative third stage of Transexpeditia business park is in Vilnius, but actually it was pre-leased a long time ago. So basically the existing supply was being successfully absorbed, and we've seen really significant transactions in logistics, in e-commerce, really interesting deals in food and fast-moving consumer goods sector, as well as some in production and light manufacturing. So the demand was basically driven by existing market players, in most of the cases doing relocation due to expansion and improvement of the operation conditions. And as industrial and logistics turned out to be one of the most resilient real estate segments from COVID-19 and related threats, not only investors, but as well end users has grown much more comfortable with decision-making towards new acquisitions and construction of industrial space, maybe specifically, especially in warehouse space. And another takeaway is that while it was not that obvious in the beginning of the quarter, now it's already clear that pandemic has served as a sort of catalyst for several business segments. So most obvious is e-commerce, we've seen some activities both by some experienced market users and market participants, as well as some new entrants in the market. Parcel delivery service companies have, even few of them has initiated expansion plans a few years ahead towards the original plan. Then e-groceries, which is actually the definition that half a year ago I was not expecting to use in the context of the Baltics market for a few upcoming years. Now we actually seeing some particular cases already. Then fast-moving consumer goods and third-party logistics and distribution companies, specifically working with food and related to e-commerce. Then stock office topic as a separate topic, which is basically probably has been in all our presentations lately, but that's one of the trends in our market. I would say the development is pretty much keeping its pace and maybe even increasing it a bit. So that actually means that Tallinn is active as usually, with 3 projects completed within the third quarter. Riga is speeding up with one project delivered in the quarter, and while in Vilnius we don't see yet some actual developments, but few really interesting, at least few interesting business cases has been approved during the quarter. So I think within 2021 we are going to see some really attractive development there. And just to visualize it, I would kindly ask you to take a look in the graphs in the right side of the slide. So there's the graphs show 3 different angles in the market of the third quarter. So it's completed projects, then projects under construction, and projects in the planning stage. And those small balloons, they show the actual numbers of the projects above each column. So basically it can be easily noticed how big the gap is between the Tallinn and compared to Vilnius and Riga. So in terms of the numbers of the projects, so the difference is from 3 to 5 times. And basically it's due to the much more active development in stock office segment. And to stick with the graphs just for an additional moment, we can see that while recent development has been mostly dominated by build-to-suit, build-to-own projects, the nearest future seems to be much more active in the speculative field. So that's Riga could be most defined by this trend, but Vilnius and Tallinn are pretty aligned as well. So what that means to the vacancy rates and the rent rates. So I would say that while it was pretty much steady for all 3 markets, it's going to remain the same for Vilnius and Tallinn, and it's going to slightly differ for Riga due to this active speculative development pipeline, and as well one of the factors might be the consolidation of Rimi warehouse in their new the expansion of their existing warehouse and logistics center. So in Riga, we expect slight decrease in the rent rates and maybe slight increase in the vacancy levels. And thinking about the future, in general, I would say that besides the concern about related to a second wave of the virus, as well to some possible economic challenges in the regional level, this rapid recovery of the sector generates a lot of a good portion of optimism between market participants. So it's encouraging decision makers, and I would say it helps spinning this whole wheel of the market further on. So thank you all for your attention, and giving word back to Margus.
So thank you, Sandra, Agi, and Regimantas for very nice overviews. I hope that everybody found some interesting points and hints about what can be and what has been and what the potential trends are. We had some questions. We try to answer those here quickly. And let me begin. There is one question regarding hotels as distressed assets. As I mentioned, yes, of course, hotels are in very difficult situation. By essence, of course, that means that it creates this kind of environment where you can most probably then find some distressed options. But currently, at the moment, we don't see that many realistic options, and I would say that the main reason is, as mentioned before, the owners are not really in trouble, although the hotels might be even closed, let's say. They are either, let's say, very well capitalized, no problem with loan servicing, or maybe they don't have at all loans there. So currently we don't see this as a real thing, but of course it might happen because we don't know how long these travel restrictions will continue. That is clearly the main thing that is affecting whole tourism, including hotels. So we will keep our eyes on this sector clearly and see what is happening. There is, of course, potential also that maybe some owners will consider also, for example, totally repurposing those buildings, as mentioned, in relation, for example, to at least in Estonia, very popular rental apartment topic. So you never know. This is very interesting time we are living in. We have been here in this situation basically only 6 months, but I would say that we have never had such much excitement in commercial real estate as over the past 6 months. So interesting times, everything can happen. I will also cover the last question regarding also related to tourism. What do you think, what is the amount of tourists we expect in Estonia percentage-wise back in 2021-22 compared to the 19? I don't have any idea. We should probably ask this from our nice politicians, how long they aim to keep this kind of travel restrictions in place. That is the main thing that is influencing also the kind of overall global, this kind of, I would say, this panic sentiment. If it will ease, if we will get the vaccine, maybe all this can be relaxed and we will get the tourists back. This year, first half, let's say July compared to last year, July, for example, in Estonia, for the share of or the change of foreign tourists staying in hotels dropped 58%. So it's quite significant amount, of course. To recover takes time, and it has been estimated that hospitality sector hotels are the ones that would require the most time to recover, even depending on the location, etc., it might take even up to 3-4 years. So it's hard topic. The second question, someone missed the vacancy rate in Tallinn prime shopping centers. Here I want to comment that the overall vacancy rate takes into consideration one big problem. This is T1. If to take T1 out, the situation is in that sense much better. I would say the kind of average there is maybe up to 2%. So in general, it's not a big issue. More we can see that vacant space will be taken relatively quickly. So again, this crisis is creating also opportunities, for example, for some retailers that didn't have the opportunities before. So let's see what the kind of nearest future brings us. We are clearly more wise probably after 1 quarter or even 6 months, because what is going on at the moment on the market, this is still, I would say, in general, this kind of fluctuations. We don't know what is the kind of new norm or new reality. Clearly, there are structural changes in office and retail also because of this, what this, let's say, crisis has brought us via e-commerce, via distant working, etc., etc. So will be seen. Related to offices, there was also a question regarding Riga office vacancies, the trend, and here I perhaps give word to Sandra, and then perhaps she can comment this more detailed.
Sure, thanks. Before I start commenting on the question, which was about the vacancy rate and why we see it stabilizing in Riga. So, for example, Riga's vacancy rate is about 27%. But again, if you take objects that does not really meet tenant requirements, the real vacancy is around 15%. So we make estimation that or prediction that vacancy rate will stabilize or go down based on that there is a kind of limited construction and activity and expected deliveries to the market in the short term. And also, as we stated before, that demand in Riga has recovered and recovered much faster than in other capitals. And it has some kind of strong backing in the demand generation. So it's local companies who are looking to improve office qualities. That's basically the relocation driver. Also quite strong and rising public sector activity. And also Riga is expected to see some newcomers and some big names there.
Okay, thank you, Sandra. And then there was a question regarding logistics project under construction in Vilnius, Riga. So Regimantas, can you please comment that topic?
Sure. So basically what we have at the moment in the market is for Vilnius, we have only one project, one speculative ongoing project in the market. This is fourth stage of Transexpedicija, which is going to be commissioned in the fourth quarter of the year. And for Riga, it's much richer in speculative development. So besides freshly started about 20,000 square meters of new A6 project by New Hansa Capital, there are two other active developers doing two stages of each speculative development. So we have Syrian Logistics Park, first and second stage, and we have Green Park as well, first and second stage, to be completed in the fourth quarter and the beginning of the next year. So basically that's about it, what's happening in Vilnius and Riga.
Okay, thank you, Regimantas. So we have answered all the questions that we have here. So that is covered. We have also said all the things we want to say about the market. What I want to say more is that the report on Q3 situation in Baltic markets will be sent out today, if it's not been sent already. The recording of this presentation will be also available in YouTube. Link will be sent out also to all the participants. So you can listen it once more if you missed something. And of course, you are always welcome to contact us via email, call us, visit our LinkedIn page, visit our Facebook page, and of course, you are welcome back on the next webinar, which will be most probably held somewhere in the beginning of next year, when we have fourth quarter and maybe also the annual results of the market. So hopefully things get better. So things are already at the moment, I would say, if to conclude, better than it was expected maybe some 3-4 months ago. So let's be positive and look to the future with the bright view. Thank you all for participating our webinar, and looking forward to see you again.
Bye-bye.
Thank you.